Top story, the Chinese renminbi dropped for a second consecutive day Wednesday. This after China's central bank liberalized its exchange rate system on Tuesday, which saw the yuan appreciate 2%. China suggests its move, but the currency sank and its biggest tumble in decades. Yuan, Shanghai, tell us what's going on.
Susan, China announced exchange rate reforms last year to make the yuan's value more market-driven. And to make it even more responsive, the People's Bank of China on Tuesday, in a surprise move, said that it will now peg the yuan's value to a variety of market forces, including the previous day's interbank closing rate, market supply and demand, and price movements in other major currencies beside the US dollar. When the PBOC did this, the yuan dropped. The central bank then lowered the exchange rate again, but based on market movements on Tuesday. So from China's point of view, the yuan is now closer to its real value. Many foreign analysts interpreted the devaluation as a way to make Chinese goods cheaper and more competitive abroad. That will happen, but China sees these adjustments as part of its long-term goal to persuade the IMF to add the yuan to its basket of reserve currencies. China wants its currency to have credibility commensurate with China's $17 trillion economy and the global clout that goes with it, and becoming an IMF global currency will help make that happen. Susan.
Wang, we had new data coming out Wednesday painting a not-so-rosy picture of China's economic health. What more can you tell us about this?
That's right. Factory output rose 6% year-on-year in July, short of expectations, and down from a 6.8% growth in June. Retail sales, that's a key indicator of consumer spending, also missed expectations. Now, the data come after a hefty drop in exports in July, which clearly weighed on Chinese manufacturers last month. Economists say the results add to an overall negative outlook for China's economy and underscores a possible need for Beijing to prop up the economy even further. Economists say Beijing's next step may be allowing the yuan's value to fluctuate even more than now and to cut commercial banks' reserve requirements further to offset the impact of capital flowing out of the country. Back to you, Susan.